Welcome to the Micromobility Podcast. I'm your host, Prabin Joel. And I have a very special guest today, Tobias, who's the CEO of RYDE. If you don't know about RYDE, it's one of the very few companies in micromobility, shared micromobility, that's profitable. I discovered the company a couple of years ago because at least 3 or 4 people pinged me on LinkedIn saying, I have to look at this company. But I think I ignored the first two messages. But then when I looked at the financials, I knew that this is a company that absolutely should be on my watch list, right? And if you are in shared micromobility, right, should definitely be on your watch list. With that, Tobias, welcome to the show.
Sure. Thanks for inviting us, Prabin, and it's a great pleasure to be here. My name is Tobias, as you said. I am the CEO of RYDE. I've been working here now for roughly 4 years. Before that, I started as a management consultant in the Boston Consulting Group back in the days, almost 15 years ago now. And then I worked in the shipping industry in Norway for another 7 years. And I like to say I came from the most traditional industry in Norway, being shipping, which we've been doing since the Viking ages, to something less traditional in the micromobility industry and shared e-scooters when I joined in 2021. The industry had just been around for a couple of years. And it was a really interesting time to join the company as well, given, the scale up of the company. It was founder-led at the time. And we were at the phase of just starting the expansion outside of Norway. And it's been a really interesting journey to, build RYDE to the Nordic leader and the successful and profitable company that we are today.
So other than the shipping experience, you didn't have a mobility experience, right, before? Or
No, unless
okay.
you say shipping is a mobility thing, but we didn't move people. We moved the goods. So, I mean, those cars and dry bulk. So something completely different.
Okay, got it. So, can you tell us about your about RYDE's founding story? Where did it all start? Yeah.
So the company was founded back in 2019 in Norway by two gents, Espen Rønneberg and Jon Olofsson, also together with a partner from China. And they looked at this industry first, actually from a retail perspective, but then they sort of, went deeper into the economics and found out maybe a rental model is better from a financial point of view. And they really looked at three problems they needed to solve when they founded the company. So one was obviously the commercial thing. You needed to get people using and paying for the product. You needed to have a sustainable operations method. How do you actually operate this? What kind of resources do you use? Do you use in-house or outsourced operation models? How do you get that to stack up? And the third part was the lifespan of the assets, because obviously you buy something which is fairly expensive, at least when you buy them in large numbers, and you need to make sure that your assets last for a sufficient time to generate a profit. And also, of course, from an environmental standpoint, you don't want to throw away your assets after a couple of months, right? So it's really trying to solve those three questions to get the economics to stack up, because this was not any venture capital, any huge funding going into this. This was one of the founders had done something from before, so we had a bit of funds, and then there were a few others that were invited in with fairly limited amounts. So it needed to be profitable from day one, and it actually was. And I think we made some choices, or they made some choices back in those days, which have really been sort of guiding principles throughout the years for RYDE, and we haven't moved away from them. And one is this in-house operating model that we have, where we do all the in-house or all the operations in-house. If that's the hunter chargers out in the street, the fleet operators as we call them, or the mechanics team working in the warehouses maintaining the scooters. Everything is done in-house, and I think you get some really positive feedback loops from that, enhancing the quality of the product, the quality of the service, and again, at the end of the day, leading us to be financially a sound company.
If you look at 2018 and 2019, those were wild times, right? So if you look at Tier, just came out raising 20 million. I think it was Dot that raised 20 million as well around that time, and Voy raised another 50 million. So there was so much money being raised at that time.
Yes.
And if I understand well, RYDE did not raise significant amount of capital compared to the big raises done by other companies.
No.
Right?
We've never done that. We have raised some, obviously, because it's a capital-intensive industry. But you can remove a zero or more on those numbers, and we have used our own profits. Right, we've been retaining all the earnings in the company, never paid out any dividends, and we have been operating at 40% EBITDA margin. So a lot of that cash flow has gone back into the business. And later in the years, as we've been profitable, we've been able to bank with the established banks as well and do sort of that sort of venue of capital. But no venture capital has sort of been piled into RYDE, as we've seen with many of our competitors.
Got it. So, and for the audience to understand what RYDE is and what scale RYDE is today, can you give us some numbers, maybe like number of cities?
Sure.
How big is RYDE today?
Yeah. No, it's become big, and we're clearly the largest operator in the Nordics. We're today in 56 cities across Norway, Sweden, and Finland. About 20 in Norway, and then 18 each in Sweden and Finland. Operating just north of 80,000 e-scooters, and we also have a few e-bikes that more like a pilot, but we're also piloting that to sort of gain experience in the e-bike space. And last year had the revenues of close to 50 million euros in 2024.
That's double of 2023, I believe. Almost double.
Yeah.
Wow.
Yeah.
Okay.
So we had a quite different growth curve than many others in the industry as well, which really grew in 2018, 19, 20, 21 maybe, and then started to taper off as funding become more scarce for many of them. We have a sort of different growth curve where, at least in the absolute numbers, we've been growing significantly more rapidly the last couple of years than we have in the past. As our both organization but also financially, we've been able to scale quicker. So we added 31,000 e-scooters just now in 2025 to our operations.
Wow. Okay. But if out of the 80,000 vehicles, almost every vehicle is an e-scooter, right? Or do you have an e-scooter e-bike mix?
No, I mean, we do have some e-bikes.
Okay.
I would say they are pilots in 2 cities and limited in numbers. But I think it's important for us. We're an e-scooter company by and large, and we want to be best at what we do and offer the best service for that in the market. But it's also important to experiment with other modes of transport to both learn the capability for us, but also see how do the customers respond, how do the municipalities respond, what do the people out there actually want? Because at the end of the day, we need to serve our customers' demand. So we're obviously very keen on doing that. I think in the Nordics, it looks like e-scooters is the preferred mode, at least in our segment. That's what we see in the utilization numbers as well. But still, it's interesting to learn more about other modes at the same time.
Absolutely. A question that I wanted to ask, which I did not have a chance to ask when I was on stage with you last year at Micromobility Europe. We couldn't spend a lot of time, but the market that you're operating in, where labor costs are pretty high, I also understand that you don't operate 12 months. I mean, you operate a limited set of months. How did you manage to build a profitable business with these constraints?
Yeah. Well, I think, it's down to some of those choices I said in the beginning, how the founders sort of laid the principle of the organization, which we've been following all the way. We've been extremely cost conscious, also in terms of the headquarters. We've seen many, and that's typical, I think, in the VC world, where you see some are successful, but many, grow their headquarters maybe too quickly, too large. We have not done that. We've rather actually, been a bit behind. So we've rather staffed up maybe too late, and have suffered from that from time to time. But we obviously have a fairly limited HQ setup that sort of supports the business well, but's more fit for purpose. And then we use all sorts of mechanisms to ensure that we're protected. When the season closes, we have temporary employees, which follows the seasonality, so that we can utilize the staff in the best possible way, and maintain the staff that is motivated to stay over winter and those kind of things.
Got it. Just for the audience to understand, when we say profitability, I mean, at least when I say profitable, it's EBIT positive, being EBIT profitable, not EBITDA profitable, right?
I agree.
So coming back to the same question, right? If I understand well, your G&A is like pretty low, right? I mean, in terms of revenue percentage, it's like, is it less than 20%? Where do you stand with that?
Oh, I would need to double check those figures, to be honest. But yes, they are low. We are, as I said, very cost conscious on the way we run our operations, and spend where we need to spend, and make sure that we have the routines, processes, and staff in place to run a large operation. We're 80,000 scooters plus, almost 50 million euro and more this year. So obviously, we need a HQ to support as well, and be able to deliver a serious service for all our customers. But it's also about being conscious on what kind of functions you add, and when you add them, so that you add them actually when you need them. And we have many people juggling many hats, so to say, at the same time, where it's a bit of operations, it's a bit of tech combined in roles to make sure that we are really efficient in the way we run things. And then I would say also the way the culture in the company is really, performance driven. We want to be the best in the cities that we're present in. Very conscious on that, developing the service for the customers, driving the utilization of the vehicles in the cities, running that operationally efficient with monitoring, tasks per hour and all sorts of things to ensure that our operations are running efficiently. Work closely with training of our staff to make sure that they know what they're doing, well trained, and thereby can work efficiently with a high quality. And obviously have lots of data with all our vehicles being online all the time. So there is endless amount of data that we can look into, and we work with that data to drive the results.
Pricing is pretty high in Nordics compared to, say, other parts of Europe, or maybe like, is it like comparable to the prices in the US in
I
terms of
would
RYDE
say the
pricing?
other way around, actually. When we've
Okay.
talked to a lot of competitors, price is something we don't talk much about, but you see it in the market if you check their apps.
Yeah.
And what you see there is that the prices tend to be, at least in my opinion, higher in Europe, but utilization tends to be lower. So the question is, where do you get the optimal sort of price utilization trade, right? Because obviously the consumers are price sensitive. So the question is, where do you have that mix? And then also for us, we want to, not only compete within our segment of micromobility, but also compete with mobility segment at large. How do you get people to park their car and take an e-scooter? You make it affordable, right? And then you build the market by making it affordable. So I think that is also a core part of the strategy, that we want to offer really affordable prices and rather build volume.
Got
And
it.
that way sort of build a larger market.
How many months do you operate in a year, in a given year?
So it varies quite a bit between the cities. I mean, we are operating in Norway, Sweden, and Finland, which is way north for those who want to look at the globe. So obviously, many cities are closed throughout the winter altogether.
Yeah.
But some cities are actually open as well. If you look along the coast in southern Sweden, for example, we are open throughout the year. But of course, demand is also reduced. But it is interesting to see in a city like Bergen, which is, it's stable but bad weather and not much snow in the winter. It is quite high utilization even in the winter months. I mean, the
Okay.
people who live here are used to rain, wet, cold weather. So it's not like this is a good weather kind of product only. It's really a
Yeah.
part of people's commuting patterns, and that drives volumes throughout the year as long as the service is open.
Got it.
Of course, you have some cities where there is half a meter of snow.
Yeah.
Micromobility and snow doesn't really mix that well. So then of course we close the service and we take the scooters off the street.
So in winter, maybe a large portion of your fleet is like off the street, right? I mean, they're
Right.
not on
Yeah.
street.
We
Right.
go into hibernation, you could say. We
Yeah.
collect all the scooters, do maintenance on them,
Yeah.
but no operational activity, you could say, out in the city.
So that's like 3-4 months in a year.
Yeah.
Okay.
Again, it varies. Some cities, depending on the regulation, we
Yeah.
close from a date to a date. So take an example of a city like Trondheim, which is a fairly large city in Norway. I think it's the fourth largest maybe. It has season end of November, and then a season start March 15th.
Yeah.
So you're sort of between those dates you are closed. Other cities are more like a continual discussion with the municipalities, and you basically await the snow. The snow come late, we have the service open for a long time, and also of course you open the service after the snow disappears. So that could be 4 months, or it could be 1 month, depending on the conditions.
Got it. What's fascinating is that, like you said, your revenue generating, time in a year is about 7-8 months, right? So for another 3-4 months, the scooters are taken away from the streets. You need to have a warehouse where you have to put them all, right? So there's some cost involved, warehousing cost involved,
Yes.
and none of them are generating revenue at that time, right? So putting all that together, you're still like profitable, and I believe your gross margins are pretty decent as well, right?
Sure. Yeah. And I think it's down to the cost consciousness, right? As I mentioned a couple of times already. And the way we go into this hibernation that I called it in these cities we close, again, it's not all the cities that we close.
Yeah.
Some of the bigger cities are actually open throughout the year. So where we close, we're very conscious. Again, how do we operate in that city? How do we prepare to make sure that we don't incur more costs than we have to during the winter? Of course, you need a warehouse, as you say, so obviously that's a cost running throughout the winter. But there are many other costs that we can reduce to ensure that we are, scaling to the season.
Got it. Your annual accounts are public, so just to understand how your costs are structured, for our audience to understand. If you take a ride, how does the unit economics for a ride break down? What's the gross margin like? How much do you account for depreciation? Can you give some idea about your unit economics model?
Yeah, I can give you some at least. I think it's clear that operations is our largest single cost item. There's simply the people that we have, and that's down to the in-house operating model, right? Where everyone, or not everyone else, but quite a few utilize third parties outsource model. We have that directly in our P&L, and so that's a significant cost. And then you have municipalities fees, parking tickets as part of that. It's also vehicles to service the fleet is also fairly large component. In terms of the depreciation, that obviously varies, and it has been prolonged because the lifespan of the assets is getting longer, right? We've heard rumors in the market that some of our competitors are talking with the auditors about the 10-year depreciation frame on the scooters. So, and back in 2019, I think we had a year and a half. So, things are obviously changing here, and it's changing fairly rapidly, and the assets actually last for a long time. So I think that obviously computes with reality much more than the 1.5 years, which you saw in the early days.
Yeah. But what's the depreciation that you use today? 3 years, 5 years?
Now we use 5 on the newest vehicles. I think that's still conservative when you compare it to the actual lifespan of the scooters. And obviously, there is a bit of vandalism, there is a bit of theft, there is a bit of broken scooters, but it's actually very limited compared to the early days, and actually in absolute numbers as well. So the lost scooters is really a small issue. And then the scooters are also extremely robust. They're extremely repairable. So we do all the repairs and keep them for a long, long time. And expect the average lifespan to be significantly longer than 5, maybe 7, 8, 9 years even.
Got it. And you also agree that the life of a scooter is the life of the frame, right, or the
Yes,
chassis?
we follow the frame. Yeah. Correct. So if you have to, rebuild the whole scooter on a new frame, it's basically a new scooter. So if there's an issue with the frame, we would more or less cannibalize the parts and use whatever parts we can for another scooter down the line, and save those parts for another day.
Got it. Yeah, I mean, it's also fascinating to look back and to say 2018 times. I don't know if you remember the very popular article about Bird, where somebody wrote that Bird scooters last only 28 days. So you basically have 28 days to get the money back or make money, or buy new vehicles. From
Exactly.
there to talking about 7 years, 10-year lifespan, it's incredible. Right.
Yeah, and that back to one of the questions that the founders asked themselves was exactly this: how do you solve that? Because it wasn't feasible for us. We simply couldn't pay for an asset that's with this price tag and throw it away after a month of operation. It doesn't work. And also from a sustainability point of view, it's a terrible business model.
Yeah, absolutely. I know that you're like absolutely cost conscious. The company's like built so lean. I mean, you mentioned that your HQ is like so lean. It's not compared to say companies that raised a lot of VC funds. Just for us to understand, what's the size of your tech team today?
So we're around 20 to 30 people working in the tech department.
So that's developers, product owners, managers, all those folks, right?
Yeah.
Okay, got it. And if I understand well, the software that you have, that's something that you've built, right? I mean, it's not okay.
Yeah, so we do in-house there as well. We're, as you might understand, a large believer in the in-house model. So we have our own software solutions, both for our operations team and for the customers.
Got it. And when you got started in 2019, did you use any other systems, or was this part of your philosophy from the beginning?
From the beginning. And I think it's fair to say there has been lots of development. We had quite a bit of issues with the app back in the early days, with downtime and other sort of downtime and other issues. But that's all sorted out now. And I think a natural thing when you start a company with that sort of philosophy, it takes a bit of time and experience to really get it right. But we've continuously developed this now over 6 years, 7 years. So it's becoming a very strong set of applications that we have.
Do you think vertical integration is very important for shared micromobility?
I think there's lots to it in the sense that you get these feedback loops throughout your chain, which helps you improve the product, helps you improve the customer offering. At the end of the day, it's about offering the best service to the customers, right? And your hardware is important for that, your software is important for that, your processes are important for that, and your company culture at the end of the day is what drives all of this. So yes, I think that's important.
Got it. If you look at the apps that we have out there, I mean, take the app from RYDE or even Void dot any company, um, the interface and what you see in the app hasn't changed over the last 5-6 years, right? It's fairly kind of the same as like 5 years ago, right? Do you see this evolving, or is RYDE trying to do something different in terms of software? Because the reason why I'm asking is, from a user point of view, they use the app for maybe like 10 seconds, 20 seconds at the start of the ride, and then probably a similar number at the end of the ride, right? And beyond that, they don't really use the app. It's not a software product as such, right? The main touch point is the scooter or the vehicle that you have, right?
Yeah.
So how important is software? What are you doing differently?
I think on the software side, it's just really important that it works.
Yeah.
Stable, easy to use, quick, as you say. People want to, if it's raining and they're standing there with scooters, they don't want to stand there punching on their phone, right? They just want to go. So I think it's really important to have that user experience in mind, the UX of the app, and just have it as fast and convenient as possible for the users. And then in terms of I would sort of qualify your statement a bit, saying there has been lots of things going into the app where you made it more user friendly. You sort of enhanced the features in the maps to make it easier to find a scooter, quicker to unlock, easier to pay, all these kind of things. But they are more like evolution rather than a revolution, right? People use the same base service. And then it's all that we build around this to give the users useful statistics about their rides if they want to go in and check, if they want to, preload credits in their wallet, all these sort of, add-ons, which is not necessarily something you do specifically for a ride, which is valuable. And then it's also all kinds of, let's call it compliance tech that we do towards municipalities to make sure that the service that we offer is, safe and sound, and that we help our users make safe and sound choices. The Android photo is maybe an example of that. It was certainly not around back in 2019, 2018. And now it's a critical part of everyone's service, at least in the Nordic. People are building AI on it and, trying to provide instant interface without too much hassle again, because you don't want to erode the user experience for the user.
Okay. If you look at the software that we have, I mean, so there's a bunch of them that you build internally. There's some things that you borrow, right? For example, ID verification. There's a ton of companies out there. Payment providers. There's a ton of companies out there, right?
Sure.
What's the biggest challenge today for you
On the software side?
on the software side? Yeah.
I think it's sort of, to be continuously innovative and make sure that we continuously develop the user experience, make it as easy as possible, as quick as possible for the customers to take a ride, and, build loyalty through offering a, just stable, easy to use software. I think that is one part. And then the other part is, how do you balance that need with, again, this compliance in tech that we just talked about? Because a lot of the compliance in tech is actually interfering with the user experience, but it's for, let's call it the greater good. And, we want our users to make good choices, but having to take an intoxication test on a Friday night before you ride, you're sort of assuming everyone's drunk, right, when they ride, which is not the case. And it definitely interferes with the user experience. So I think balancing these needs that's a challenge.
Got it. Something linked to software and also profitability is payment providers, right? I mean, most companies, they use Stripe or Adyen or Data Trans, or one of these companies, right? And as it's a general knowledge that because per ride, payments are around €2, €3, whatever that is. It's a micro payment, right? If you look at Stripe or Adyen, one of these companies, they have a fixed fee per card transaction. Can be 25 cents, 30 cents, depending on the card. And there's also a percentage that applies on top of that, right? I mean, of course, when you have high volumes, you can negotiate that to get a better price. But still, if you put that in percentage terms on a €2, €3 transaction, it's still a high percentage, right? I mean, it can vary anywhere from say 5-6% to even like 10-11-12% as well, right? How do you manage this? Do you see some solution for this in the future? Because that's eating up almost like 7 to 10% of your ride revenue,
Yeah.
right?
Luckily, the numbers are not that high for us, as
Okay.
you mentioned here, but they are significant. And again, I think it's this cost-conscious culture where we chase everything. This included how do we work with the vendors, how do we bundle volumes, how do we look at alternatives, how do we try to be innovative in the space. At the same time, it's also extremely important for the users that the payment process is, let's call it smooth. It should be easy to add your card. It should be quick. It should be safe, obviously, and we should allow the users to pay as they want to pay.
Yeah.
So I think again it's about balancing these sort of things, but at the same time using our leverage or our size to really look into the commercial offerings that's out there.
Sure. But you cannot compress so much either, right? Because I mean, anyway, if you're using a Visa card or Mastercard, American Express, even Visa, Mastercard, they take a percentage, right? Which is significantly high, right?
Yeah, and I guess that's like any payment.
Yeah.
Anyone wants to get paid from their customers. It's obviously you pay some to the banking world, right? And they
Yeah.
want their fees. Luckily, there is competition in that market, and you can use that. And then, yeah,
Got it. In terms of hardware, so you don't build your hardware; you buy scooters from one of the providers, but then you build your own IoT, right? So two things: why did you decide to buy from other companies than build? Because there are companies out there of your size that that are building their own hardware, right?
yeah.
There are companies smaller than you that are trying to build their own hardware as well. But why did you choose to just buy off the shelf? Second is, on the IoT side, why did you decide to build IoT internally?
Yeah, I think it's also a sort of truth with a bit of modification that we just buy off the shelf. It is starting with a platform product from one of the large manufacturers out there, but then we do a lot of customizations where we work with the manufacturer to just more than our color, right? It's
Yeah.
how the wires are drawn, how different settings are tuned, how the firmware is also developed. We look into many of these aspects, both the hardware and the firmware. And then again, this IoT discussion, it's correct. We do develop that in-house. We produce it in-house. And I think that has given us some really interesting capabilities in terms of turning around quickly, developing solutions for municipalities in terms of data sharing, geofencing technology, and control of the scooter. It's sort of, the brain of the scooter in a way.
Yeah.
And controlling that, I think, gives you lots of interesting capabilities. And we've actually been able to push the cost a bit on it as well.
Mhm.
So I think that has been a really successful strategy for us.
Yeah, I mean, exactly like what you said, IoT is the brain of the vehicle, and I mean, brain or heart, however you want to call it.
Yeah,
But I'm because I've built an IoT company as well. If I have to give advice to companies, this is exactly what I would advise them to do as well. I mean, own the heart, own the brain of the vehicle, right?
exactly. Yeah.
But is it only because you want to build some custom solutions for for say for example cities, or was there any user experience uh, points as well?
Yeah. Well, I think it's back to this in-house strategy that we had all along, and we also had, as I mentioned, there were sort of two founders here in Norway, and also a third gentleman, which was very involved in the establishing of the company, and he had a lot of expertise in building IoTs. So I mean, we were also lucky in that way that we had someone already from the founding days which knew how to do this, and we really bought into the strategy of doing this in-house.
Yeah.
I've been doing that ever since, basically.
Okay. So Lime's CEO was on an interview very recently. It's a podcast called 20 Minute VC, and a question was about about the hardware. So this right now, as I see, there are two camps. One is like we have to build off-the-shelf hardware, and others, for example, Bolt, they build their own hardware as well. Lime, they are building their own hardware, and their point is that they are successful because they build their own hardware, right? Um, what's your perspectives on that? I mean, for example, Lime has that scale probably to build their own
Yeah.
vehicle.
Yeah.
Where do you stand in in that discussion?
No, we're also actively talking about this internally, and we're actually doing a pilot this year where we will
Oh,
have
okay.
some scooters developed in house and very closely together with a manufacturer, which is different than we normally use. So we are experimenting in that space as well, and I think it's down to some of the things that we already talked about. How do we ensure the best user experience out there? How do we ensure the best lifespan and sort of repairability of the vehicle? And also how do we offer an attractive product to the cities? And I think sort of combining those three, we see that there are potentially interesting things that we can do doing now as well. That being said, there are not many large producers in this space globally, but the ones who are there are obviously pushing the boundaries, working hard to develop the best product, and they have a very large scale. So obviously, lots of strong experience in their hands as well that we benefit from when we start with their off the shelf and then work with customizations, which we certainly can do given our scale, and we've received strong support for those customizations throughout the years.
A question on customer loyalty, right? So you're building, software in house. You're putting a lot of effort on user experience. Do you think there's customer loyalty in this business?
I think there are at least loyal tendencies, and certainly among the recurring users, which buys monthly subscriptions or those kind of products. For the pay-as-you-go users, I think it might be more difficult, but we do see markets where we have, the fleet caps are divided evenly, say among 3 operators, and we have a third of the scooters and 60% of the trips in the city. So obviously, it means that we capture far larger than our fair share of the market, and I think that
Yeah.
speaks to loyalty, right? And I think we are able to develop this customer preference where our customers, if they have 3 scooters lined up, they will choose ours because of the different
Yeah.
attributes we've been talking about. And obviously, customers are also uniquely different. Some are just after price, some are just after creatures of habit, using what they've always used. Some like the tech, some like the app. So all kinds of reasons for choosing a product, and
Yeah.
that's why it's best, or it's important to be very targeted on each one of these attributes that our customers care about. And in that sense, I certainly believe you can build loyalty in the user base.
Few years ago, when all scooters were being launched across different multiple cities, it was true for free floating, right? So basically, you can leave the scooter anywhere, right?
Mhm.
But over the last years, some of the cities, I mean, if you've been to Brussels anytime, now you cannot pick scooters off anywhere.
Yeah.
You have these parking bays, right? And
Yes.
many cities are moving to this parking bay model, right? So a couple of years ago, if you have to pick a scooter, loyalty, I mean, I don't know if we can call it as loyalty, but people pick scooters based on availability, right? So
Yes.
so open the app, open different apps, and find the nearest scooter and pick that scooter, right?
Yes.
Doesn't matter which brand that is. Now users have a different choice, so you have to go to a parking bay, and now when you go to a parking bay, you have 3 or 4 different operators, I mean, and 3 or different kinds of scooters in front of you, and you have to make a choice, right?
Yeah.
And what I kind of assume is that people would pick a scooter that looks better, right? The newest model, right? Or the one that looks really good, right? So then the way users are picking scooters, it's changing as well, right?
Yes.
Um,
For sure.
do you think it puts pressure on operators to keep changing fleet or upgrading fleet, at least in larger cities where you have these parking bays?
Yeah, I think the parking base certainly changes the dynamics of the user behavior. As you mentioned, if you have a free floating model, availability is really key, right? How many scooters are you able to have in a
Yeah.
city, and if you're able to freely choose, you can play with that lever. In a city with a fixed fleet cap and mandatory parking, it's obviously a bit different. I think it depends on the length of the contract, because if you combine that kind of dynamic with very short contract length, you might certainly get this incentive that you always need to buy the latest, which again undermines the sustainability part of this industry, right? Because then you change the hardware without it really being necessary.
Yeah.
If you have longer contracts, I think you can mitigate that dynamics. But then I'm a strong believer in how do you work with your vehicles over time? How do you maintain them? How do you sort of clean them? How do you do those sort of things to make sure that they are attractive and that the consumers actually prefer your product? And I think in a mandatory parking environment, I'm sure you also notice that in Brussels, the consumers have preferences, right? And
Yeah.
you allow them to have the preference, because in the past it was more random in the sense which was closest to you in a market like Brussels. But that dynamic is removed. So the consumers is actually faced with the choice more or less every time they choose a scooter. And I think we don't have many of those markets, but we have a few which have mandatory parking. And we see that, typically there are one or two brands which are chosen, and then the other brands are chosen if the two first ones are not in the bay because they've already gone from the area,
Yeah.
and they sort of get the rest of the business, so to say.
Yeah, yeah. This is also challenging for the business because previously, I mean, there was equity raised by companies, and so companies used equity cash to buy hardware, right? But now I think we are in a state where you could easily raise debt financing. I mean, for example, Voy raised, I don't know, 50, 60 million at really attractive prices through a bond issue, a single-digit interest percentage, right? Um, why could use the 50, 60 million to buy new vehicles,
Yes.
probably pay that over a certain period, say let's say 3 years, 5 years, whatever that period is. But then if users actually pick scooters which are newer, it puts pressure on companies to keep raising funds often to renew their fleet, right? Do you think that'll change the underlying unit economics model of operators? How do you see that evolving?
I think this is only part of the picture, because it's not like consumers always choose the latest and greatest, right? They're also
Mhm.
interested in the price, they're interested in the user experience. How is this product actually to ride? Is it a good user experience, or is it sort of, new and they haven't really gotten their firmware together yet, for example? How is the maintenance over time? Again, just after a couple of months of heavy use on the city streets, that has a large effect. How is the app experience? What have you used in the past? Again, many are creatures of habit, so it's not like you can change the consumers just by putting a new scooter out in the street. So I think it's much more nuanced than just having the latest and greatest hardware. But of course, you also have different kind of cities with different competitive intensity, right? And
Yeah.
we see in some of the most competitive intense cities, there is this tendency to a larger extent than in the smaller cities. And uh, so I think this will, over time, it will balance itself out. And also, if you have a really long view of things, if you raise a bond today, you obviously need to pay it back at some point, and you
Exactly.
can't do that forever, right? So if you're not able to turn this into a profitable business and really be successfully, not only commercially but also financially, that business model is not going to last, and you will have sort of reversion to proper unit economics where that needs to be solved. So I think this will gradually level out, and I think the effect is more pronounced in some of the really large cities, but in general, I think it's so many other attributes which contributes to the consumer's behavior on top of just the vehicle
Yeah.
being very new.
Do you think price matters, especially for pay-as-you-go customers?
It's interesting. I think there are so many segments out there. When I talk to friends, it's like, what did you pay for your last e-scooter trip? I don't know. Did you
Nobody
use
knows.
a
Yeah.
pass? I didn't know there was a pass. And then you
Yeah.
talk with some which are students, like, oh, yes, I always check the pass. I have all the apps. So, there are so many different consumer segments out there. Some are more ignorant of the price and are also, as long as it doesn't cost me more than, €4, I'm happy. And some are super cost conscious. So, you have all sort of groups out there. But
Yeah.
price is obviously important for many. And I
Yeah.
think in general, the interest rates are on the way up. Economic environment is a bit more uncertain. So people are obviously cost conscious on their own pockets as well. I think price is important.
Okay. Yeah, I mean, it's a interesting discussion around pricing because if you look at voice Q and financials, 65% of the revenue came through pay as you go. So these are users who don't care about pass, who don't have a pass, they just go pick a scooter and ride, right? And the question that I have is, if you increase the price by a cent for per minute, would that really make a difference? Second is like, is it worth uh, pricing, say, 1 or 2 cents cheaper than the nearest competitor? Does it make a difference? For passes, I fully understand, right? But for pay as you go, does it make any difference at all?
I think, I mean, if you're talking literally 1 or 2 cents, I think it's difficult to get that to see a large effect. But of course, what happens if you do 5 cents? At some point,
Yeah.
something starts to happen, right? And where do you find that sweet spot? And what happens if you gradually increase the prices? I think there's also time effect here where there is significant lag. So if we increased our prices today, you wouldn't necessarily see an immediate effect tomorrow. But in 2 months, maybe people have woken up and actually started to choose another operator, right? Because they provide a better value proposition. So I think, on the margin, 1 or 2 cents, I fully agree. But overall, there are certainly price sensitive users out there. And again, segments are different.
Yeah.
Some customers you would maybe lose on 1 or 2 cents. I think that's few, but some. And some you wouldn't lose on a euro. So it is different. And then I think, as I mentioned in the introduction, we're also conscious on building a market and building volume. And by that, developing also a higher market share, taking people from driving their own car, for example, and really build the markets and become profitable also through volume.
Got it. Do you see any business model innovation happening? Because we are stuck to €1 for unlock and price per minute. I know that, for example, Bolt and when I was at Bond as well, we tried to experiment on per kilometer pricing as well. Do you
Yes.
see any business model innovation happening in the space?
I think it's more like evolutions and not revolutions, as we talked
Yeah.
about on the tech development as well. But certainly some are experimenting with this kilometers-based pricing. You have now these free unlock passes, which is basically a hybrid where you pay a subscription to avoid the unlock fee, but you actually still pay a minute fee for your usage. So it's sort of a hybrid of a pass and per minute, which is at least fairly new in the industry in the Nordics. And then I'm sure there will be other experiments here as well. And obviously everyone's, trying to be creative, trying to offer good value to the users. And then I'm sure also it's also transparent in the sense that we see obviously what's happening in everyone's app, right? And they see what's happening in our app. So there's a lot of competitive dynamics here as well, where people are, looking at the results or at least the prices and the products that offer in the apps.
Got it. You're operating mostly in the Nordics. I mean, we all know that this industry is like heavily influenced by regulations and policy, and at some point, I used to say that it's a B2G segment and not a B2C segment, because at the end of the day, it's government that decides, or a city that decides how many scooters you should have, and a lot of aspects, right? From your experience working in this industry for the last couple of years, what's your favorite city in terms of policy? What are they doing differently, and why should other cities take inspiration from the city?
Yeah. Well, I think it's really important that you regulate the actual problem, because we hear so many strange proposals on regulations, and I think strict fleet caps in a whole municipality or city is one of those examples. Where do you have too many scooters? Is it in the inner city center? Most likely it is, right? You don't have in suburbia too many scooters because the market dynamics is very different. So I think cities regulating issues targeted, those are sort of my favorites. I think there are some examples of that in Norway, where there are fleet caps in the inner city center, and then outside you can actually have as much scooters as you like. And then, of course, the municipality has some sort of handbrake regulation, so if it becomes chaotic, they can regulate as well. But that hasn't happened for quite a few years, so I think that is important. And then I think it's also just, that there is a bit more trust between the cities and the operators today than you had before. And I think that trust is important, so that you can actually develop a product better for the consumers, not only about regulating the negative effects, but actually trying to get the positive effects. And I think, in the beginning, you saw lots of dynamics around fleet caps, slow zones, no-go zone, all this kind of thing, which was all about cracking down on an issue, not really supporting the positive trends of micromobility, where we are replacing car traffic in the city centers. We are making it easier for people to get around, affordable. So I think it's really important that the cities acknowledge those effects and regulate the real pain points, not with sort of a broad stroke approach.
Got it. And what do you think about the duration of a tender, or any license that is awarded? What's the right duration? If you look at station-based bike share, you have 7 years, 10 years. Where it's a long duration for any player to set up solid operations,
Yeah.
operated for a very long time, right? What do you think is a right duration for shared
I think
service?
it's in Norway at least where it has been most tenders. Sweden is a bit different. It's more like a license scheme, not a tender. So for the tenders, it's been very short, with down to 1 year. Now it's converging more to 2 or 3 years, which I think is better. It provides much more predictability for the operators. At the same time, I think there's an issue with what's the enforcement mechanisms that the cities have to actually make sure that what you write in your tender you follow up on, so that it doesn't become just a paper exercise and you're awarded a 3-year tender and then there are no compliance check down the line. So
Yeah.
because then you quickly get this race to the bottom where operators are ever stretching the limits to see how far can they actually go in terms of not following their own commitments, and that is obviously really negative for the cities. And I think a controlling mechanism there is to not have the 7-year period, right? Because if you do that and you have limited methods to enforce, that sounds like a recipe for failure to me, at least.
Got it. So you managed to build RYDE in the Nordics. I mean, focusing on Nordics, you mentioned that you're at like 80,000 vehicles and probably do I mean, I think 2024 you did close to 50 million, right? And I'm guessing you should land somewhere around 70 to 80 million this year.
Good
Um,
guess.
so it's a pretty solid business just focused on Nordics. I mean, and also taking into account that it's just like 7, 8 months of operations, right? Um, do you think the model that you have today will work, for example, in mainland Europe or US or elsewhere?
Short answer is yes. It won't be easy, of course, but
Yeah.
we think the consumers, they, at the end of the day, they buy the same service. They buy a mobility service where they are uh, transporting themselves from where they are to where they want to be. The cities are typically asking for the same things in our experience, in terms of parking, safety, sustainability, maybe some social aspects as well. And some cities are obviously asking for different things, but by and large, these are the topics that they are concerned about. Those are the topics the Nordic municipalities are concerned about. So I think that will be certainly something will be successful on also outside the Nordic. And that is also part of our strategy. I mean, we are not
Mhm.
here to maintain our leadership in the Nordics only. We want to
Yep.
grow and really become the leading operator in Europe for micromobility. So obviously our ambitions are large, but it's not like we've set a timeline for that and we'll conquer Europe in sort of 2026. But we have this ambition to do that over time by building, stone by stone, as we've done in the
Mhm.
Nordics, and keeping our profitability, keeping our customer focus, and the organizational culture to develop uh, the results over time.
Got it. You have a private equity firm behind, the company. I think they. I don't really remember. I think the last time I looked at the ownership structure, they own more than 40% of the company.
And they
You
have
know,
a controlling stake of the company.
yeah, exactly right. Did that make a difference in terms of the culture that you build? Because you mentioned about the founders having a certain culture, and that kind of permeated through, right? I mean, in the way the company was built, having a PE firm behind rather than having a VC firm, did that make any difference in how the company was built?
It's a bit difficult to compare it with something we didn't have, right? Because we were not backed by VC, and which in my experience, or not experience, but at least looking at the other operators out there, have prioritized growth extremely.
Yeah.
Land grab kind of strategy. We have had supportive backers in the sense that the owners are seeing the results of the way we've been doing things, and have sort of been continuously supportive of that strategy. So, short answer is, I don't think it has changed a lot now.
Got it. Got it. Where do you go from here? I mean, your strategy would be, to launch new cities or launch new geographies, like you said. I mean, because you've kind of set yourself in the Nordics. You're doing pretty well. So geographical expansion is the next thing. But would you also look at M&A, or you would want to set up your own teams?
I think when we expand, we want to do it with our own model, with our own
Hmm.
sort of the way of doing things, which has been extremely successful. M&A is not really, something we're actively looking on, but at the
Yep.
same time, M&A is also something which can pop up quickly, right? So
Yep.
you never know, but it's not really the way we do things. So our strategy, which we've been employing in the Nordics by building new geographics
Hmm.
internally, will be what we are also going to do outside the Nordics. And then I think there is lots of room to grow even still in the Nordics because more and more people come to the product. You see much more spread in the user base today than you did just a couple of years ago in terms of age of users, for example.
Yep.
And we can cover also, suburban areas much more. Regulation is also starting to open up a bit more in the Nordics, at least in Norway. So I think there's ample room to grow there. But geographical expansion is really the key growth lever for us in the sort of next period, I would say.
Got it. And when you talk about expansion, geographic expansion, this is a cash intensive business, right? So if you have to go expand your geography, you really have to acquire a bunch of scooters, right? How do you think this can be funded? Because right now, as we stand today, VC funds are not out there. We have examples of, for example, Voy raising cash through bond issue. Uh, is that the only way to go today?
I'm sure there are other means to go as well, but it seems to be very challenging, at least for the operators which have been more challenged on the financials, right? I think the
Yeah.
investors were willing to fund those back in the days, but now they're demanding profitability before they put up any more cash. For us, with a healthy business, 40% plus EBITDA and also EBIT positive, we generate our own cash, which we again put back into the business. So
Yeah.
we use that to grow. And the banking world is open to profitable operators, so we can also leverage funds through that, which is obviously less expensive funds than equity. So I think we will be able to fund a lot of our growth ambitions with that model going forward as well.
Got it. If you look at the next couple of years, say 5 years, 10 years from now, right? Do you think there's room for a couple of billion-dollar companies in this space? I mean, I'm not talking just in Europe, but if you look at global companies today, we have like very few examples. For example, Lime probably is pushing closer to a billion. I mean, I think their net revenue was maybe 600, 700 million last year, right? They're getting close to that. But do you think there's space for a couple of very large companies to be built in the space? The reason why I'm asking is if you look at ride-hailing space globally, there are so many companies that try to be global, but today, as we stand, there's only Uber that we can say which is truly global,
Hmm.
right? Um, do you think it'll play out differently in this space?
It's a bit difficult to say what happens 10 years down the line,
Yeah.
of course. But I think certainly we'll have some really large operators being, intra-regional at least, if not truly
Yeah.
global. So you could cover sort of, Europe, US, Middle East, maybe. And then, who knows what happens from there. And then I think in terms of the market size, there is just so much potential here. And there are many underlying, drivers for this. You have obviously people coming to a new product. Still, it has taken a time to get more and more users. That happens every day still in our existing markets. More and more people are coming to the product.
Yep.
Regulations are opening a bit more up. Cities are cracking more and more down on car traffic, looking for sustainable alternatives. Micromobility is one of them. So I think underlying demand growth is going to be a really, really supportive of that industry and enable to have at least some really large billion-dollar companies, interregional, if not truly global.
What's your vision of shared micromobility going from here? I mean, if you have to paint a future for shared micromobility, what would that look like?
I think it's a well integrated service in the cities, which are available for everyday use at affordable prices. Again, building the volume and have a service which works very well for everyone, including those that don't use it. So you have sort of parking and safety issues are really solved,
Hmm.
and the cities actually also support this then to meet their green ambitions and targeted car reductions, for example.
But do you think price reduction would be the next big unlock then?
At least in real terms, as inflation is a bit higher these days than it has been in the past, I think in real terms, yes, prices will not increase, at
Hmm.
least not much, I think. I would rather build volume and go that way. Obviously, as we talked about, there's a trade-off between volume and price, right?
Yeah.
And what is the optimal decision might also be different from market to market. But at least for us, we are very conscious on building that market, making this product affordable, getting the customers to build a habit around a stable, affordable, safe, environmentally friendly service.
Got it. If you look at the market today, I mean, there's still competition, right? There's Void, Teardot, there's Bolt, Lime. I mean, Bird is also trying to come to Europe right now, re-enter Europe. So there's a fair amount of competition, right? A couple of years ago, if you look at operators, it's very difficult to say what the differentiation is between these companies, right? Because it's the same hardware, kind of the same app, it's very difficult to differentiate. Do you think there is differentiation today? That's one. And second, if is, how does RYDE differentiate from every other company out there?
Yes. I for sure think there's opportunities to differentiate. It's difficult, but it's certainly
Yeah.
opportunities. Again, it's the combination of your whole product. It's the software, it's the hardware, it's the operations around the whole thing. It's the convenience factor of the product, the pricing. So I think it's the combination of those which makes you unique and how you're able to in some be slightly better or a lot better in some markets than your competitors and build that preference. As I said, in some markets, we have a third of the scooters and 60% market share. And I think
Yeah.
the proof is there, right? It is possible to differentiate it, the service. It's not easy, but once you have it, it's also difficult to replicate because it's a sum of many small parts. It's not just to call your vendor and buy 10,000 new scooters and then you're the market leader. It doesn't work like that.
Absolutely. But it was a very nice chat with you. I mean, we spent almost an hour talking about the business. This is exactly what I was looking for. Wanted to understand more about RYDE. Thank you so much for coming on the show and explain and explaining answering all my questions. Do you have any last words for our listeners?
No, thank you for inviting us, Prabin. It's been a pleasure being here talking with you about micromobility. I think it's really interesting to see where the industry will go the next couple of years, how we can underpin cities' growth targets and reduction targets for car use, and how our product can just be ever more integrated into the city and into everyday people's commuting patterns and travel patterns, so that we develop the service for the better of the cities that we operate in.
Got it. Where can people find more about RYDE? Um,
Well, they should come to one of our 56 cities in the Nordics and try it out. And then obviously we have a webpage and LinkedIn and whatnot. Yeah,
So that's ride-technology.com, right?
right.
If I'm
That's
okay,
correct.
got it. Perfect. Thank you so much, Tobias, for joining, and congrats on building an amazing business. I take RYDE and you as an example when talking to many of the folks in the industry. So you've set kind of a benchmark for others to follow. So thank you so much for all the good job, and looking forward to more chats like this.
Thank you very much, Prabin, and thank you
Thank
for the
you.
time.